This channel is for educational purposes only. Make sure you do your own due diligence before making any investments. And there is inherent risk in trading, so it's speculative. Just make sure you keep that in mind. Hi, this is Joe. We're going to talk about bar by bar analysis, or what I would call bar by bar analysis, or candle by candle analysis. So I think it's really important. Again, I have said from the first video that I did on this channel that knowing price first and foremost can add a tremendous amount of value in your analysis. Before we even get to moving averages, before we look at MACD or ADX or anything like that, all of those can really supplement your analysis if you're really good at understanding how to look at price. And I would say you could use this even without the volume. I mean, the volume tends to add some value, but you should be able to go through and look at each bar and learn something from that bar. And then if we're talking about, say, a daily chart and we're going bar by bar, that same analysis can be used on a weekly chart or a monthly chart or even a quarterly or a yearly sometimes. And it can be of tremendous value if you know that, say, a monthly chart has done something significant. You could then go down to the smaller time frames and be able to take advantage of that. So I want to go through and give you an update of, I'm basically going to go through one stock and I'm going to do it again. I'm going to go bar by bar and show you what I'm seeing. This might sound really basic to you, but I can tell you that it isn't, because you want to be able to do this on your own and sort of test yourself. And it'll take some time, but let me show you how I would go about doing it myself. So I've got the chart of Keysight Technologies, KEYS. It's just a daily chart, kind of goes sideways with some sporadic movement and then starts to trend by the end here. So if you see how this starts to trend to the right. But let's just start. I'm going to start over here on this drop. And so what I want to show is I've taken everything off the chart except for one. I've got price, the symbol, the candlesticks, I should say. And I've also got the a 4 simple MA, this line here. And it's become pretty valuable for me, and I'm going to show you how I use that in conjunction with the bars to give me some pretty good insights. So most of the people that have been on this channel for a while, I think you recognize that this is not a beginner's channel. I almost consider it more like a master's channel or something like that, because I'm skipping over a lot. I'm assuming that you know a lot of the basics, but I just want to explain the candlestick and what is really the underlying theme here, or what is really taking place on each bar. So let's just start with this bar right here, this big red bar to the downside, because I just want you to understand. So we know the high of the bar is just the high of that day. And if it was a weekly bar, a weekly candle, that would be the high for the week. And then we go all the way to the bottom, that little wick at the bottom, that is the low for the bar. And in this case, it's a daily chart, so that's the low for the day. I know some of this sounds pretty obvious. We're going to get into a little bit more detail in a second. So on a red bar, the open would be at where the color starts at the top, right? I mean, where red starts, because that's the open for that bar. And then at the bottom where the body of the candle ends, that's where it closed for the day. So what that tells me when I look at this is that we opened up, tried to push a little bit higher, and then failed. And then sellers came in really strongly and basically sent it down the entire day. And then at the very end of the day, maybe just bounced off the low a little bit. But clearly the sellers won this day. I mean, if I'm looking at this single bar and I'm saying who won, it was definitely the sellers. We opened up here and closed way down here and had a pretty strong decline. And, we closed well below where we opened for the day. If you close below the open, then I would consider to be it a win for the bears.
If you close above the open, then I would consider it a win for the bulls. Now, depending on the size of the bar, the bigger the bar, obviously the more that side won. And in this case, you had a monster red bar to the downside. And I think, it was a very strong down day. Pretty much everyone was in agreement to be sellers. There wasn't a lot of indecision in this bar. Now, what I also want to point out is we have this 4MA. And if you notice, this bar touches that line. This bar touches the line. This one touched the line. This one touched the 4. And this bar touched the 4. But look at where it closed. Really stretched away from the 4. So the distance where this closed down here is really far away from the 4 at this point. So you could almost look at this from a short-term standpoint and say, wow, you know what? I mean, this line tends to act like a little leash. If you get too far away, it tends to pull it back. So we know if we get a big bar that's stretched away from this line, that odds are in the next bar or two, we should be expecting a retracement back to the upside. Now, because this is a daily chart, it's not giving us a significant amount of it's not maybe giving us a lot of information about the bigger picture. But if I were looking to trade off of a 15-minute chart or an hourly chart or 10 minutes, something like that, this is pretty valuable information because I know I'm getting really stretched away, especially if we look at the close here and then we gap down the next day and take out this low from over here. And we're gapped down and look at how far away from the 4 we are. And not only that, when you open, you push down even more. So during this day, we were really far away from the 4 and we had undercut this level. And then when you came back up through that low, now you're stretched away from the 4 and you're undercut and rallying back up towards this moving average. And so your bias should switch automatically. Now, we've been going straight down, but you're seeing, because you're doing the analysis bar by bar, we can see that we've made a pretty big and important move right here. Because we dropped red bar, indecision bar. You see how it closed basically where it opened for the day. That's why there's no color, green or red. And then negative down bar, big down bar, then get oversold away from the moving average. And now we undercut this level, but we don't have any follow through to the downside. And then you rally back up. Now we're starting to get a reversion back towards this moving average. And because it undercut these lows, we could probably assume that we're going to get some type of a reversal pattern. And so what ends up happening is it crosses over the moving average. And then when it pulls back, notice this bar right here. This bar tried to get back down below the moving average, but the moving average is starting to turn up. And now we actually close back above it and we create a tail. So when we look at that, now we were down for the day, and then by the end of the day, we came all the way back. So now we have a tail that has tested sort of this support zone a little bit and this gap area, which was created here. And then we close back above the moving average. Now the moving average is starting to rise. And if you notice, we touched the line here, we touched the line here, touched it here, and again here. And then this bar gets really far away from the moving average, similar to what we had here. Now, the difference is it took an extra day to reverse to get our reversion back to the moving average back here. But in this case, it did it all in one day. It moved away, and then by the end of the day, it gave it all back, and it reversed back towards the moving average because it was too stretched away. So then we get the gap going the other way. And then we get some follow through going to the downside. Now, notice this big red bar to the downside had zero follow through right here. This bar is an inside bar, meaning big red bar. And instead of dropping down and making another lower low on the following bar, it didn't follow through. It stayed inside this red bar. And then we have a narrow range bar. It closes down at the low, but if you notice, it opened and closed at the same range. This is an indecision bar. There's no strength. There's no real strength in the buyers or the sellers right now. But what this tells me is you had this big red bar to the downside, and you're not getting any follow through. Now we get this inside bar. Well, the direction this goes from this inside bar, and really probably more like you'd probably need to take out the low of this to really get going to the downside, is going to tell us a lot about the short-term direction. Now, if you notice what happened, it went to a new low and it tested this bottom. So on an hourly or a 15-minute chart, that would look like a double bottom. And then we turned back around and took out the high of this bar and the moving average, and look at the size of this green bar. That's real buying. Again, everybody in agreement on that bar. That is true strength. Open near the low of the bar, close near the high, and it's a wide range bar. It's one of the widest range bars we've had in several bars. Then we get some follow through, and we're holding the bar, holding the bar, holding the bar, but now we not only didn't make a new high, now we're showing red in the bar, meaning that we opened up here and closed down here. Now, it closed above the midpoint of the bar, so it's more of a neutral bar. And then we did the same thing here. We came down, but we couldn't follow through to the downside. Now, this bar is inside of this bar. And then this bar is inside this bar. So we have back-to-back inside bars. Now we're forming like a little bit of a coil pattern. And a break out of that coil would probably give you a pretty good idea of what's going to happen over the next few days. So, and then if you notice, when we dropped down, we got really far away from the MA again on this drop. So we opened here and got really far away inner bar, and we had gotten stretched away from that bar. So what's the next obvious move for this market? Sometime in the next day or two, we're probably going to come back up towards this moving average. Now, because it did it via a gap and ended up closing back above the bar, you got to start assuming that the bias is to the upside. And notice where it's holding this 4MA on this pullback, because this is a pullback, because it went up and it was really far away from the moving average. And then by the end of the bar, it came back down and sort of held it. And then we get another gap of follow through. So I want you to start looking at this. And again, now let's say that this is a monthly chart and not a daily chart. Now, all of a sudden, this is giving you significant insight. So let's say this is a monthly that has come down and undercut this level here. And we're looking at a trade for a daily chart or something like that. Well, we have a pretty good, I think, idea that there is pretty significant support underneath here, and that we've got some type of a reversal probably going to take place on the monthly chart, at least over the next couple months, 3 to 5 months, something like that, potentially. And that's how I think you want to use this information. So you can do it, obviously, if you want to trade intraday. You can use a daily chart or an hourly chart for this type of information. But if you want to look at bigger picture, you could look at a yearly and do this type of analysis. You could do a quarterly bar chart. You could look at a monthly, which is the one I would recommend, and look for these types of signals. You know, these big red bars like this. Look at the size of that down bar, but notice there was no follow through. It went sideways, and then you had another down bar, but you didn't take out the low of this bar. And then we push up higher. And now I want to make mention of one last thing. Big bars, the midpoint of those bars are pretty important. And it's a zone, it's not an exact level, but we want to see how the stock reacts around the midpoint of big bars. And if you notice what happened, we kind of pushed up. It tried to get through it, but it then immediately gapped down and opened at the midpoint. And then we saw huge follow through to the downside, got stretched away here. And then if you notice on this move back to the upside, now you had a big undercut and rally pattern where we took out several months of lows and then immediately reverse back up. Now you got to start thinking that this area is a undercut and rally pattern, and that set the stage for a really significant up move. So you start with the bars, you look at support and resistance, Look at whether a stock opened or closed above the open, red bar, green bar. Look at the size of the bar. Understand the midpoint of that bar is an important level when it's a big bar. And take all this information and use that to your advantage on the smaller time frames. So I hope this information is helpful. Please, post any comments you might have. Give me a like on this if you really like this type of information. I want to continue to do a series like this where we go in more detail on a lot of this information. All right. Thanks for your time. Talk to you next time.